Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, February 2nd, 2010. Well, folks, the markets are consolidating today. This is a classic consolidation day. Volume is very, very light. Notice the market opened slightly lower and has just chopped sideways the whole day from that point on. Right now, we have the Dow Jones Industrial Average up 5 points, the Nasdaq up 1 point, but the S&P 500 is down about 2.5 points. Gold and oil are fractionally lower today, but again, that's after some big gains in both those commodities in recent days off the Egyptian situation as people ran for cover in gold and also bought up oil based on the fear that disruptions in the Middle East could occur. All right, so again, today, a classic pause day. We got the ADP private sector jobs numbers this morning. They came in at 187,000. That was pretty good overall, but again, it doesn't matter. I hate to say it, but until you get the non-farm payrolls unemployment number on Friday, the little numbers here do not matter much. As you can see, even with a decent ADP number, the gains were so massive yesterday off the rally that the market, again, just going sideways. Believe it or not, you can actually draw a little bit of a trend line here. Take a look at this little triangular pattern forming. Just connect the highs right now, connect the lows, and you have a triangle right there from this bottom level and this upper level. Now, if you had to take a guess which way it's going to break out based on light volume, you would probably go with the upper way to the upside, but you never know. Again, I don't think the market's going anywhere fast today. I said yesterday in the chat room, over 50% chance of a flat day today, and it looks exactly like that's what we're getting. Okay, again, volume super light. Let's take a look at what's going on. Otherwise, you have the dollar here trading just fractionally higher as well. Notice the dollar, here's where it closed yesterday, and here's where it's trading today. So you see a little bit of an upward angle, which makes sense, right? Think about the dollar going up a little bit. What does that do to the market? Remember, the market works inverse. So the market would generally be down slightly today. Is that true? Absolutely. If you take a look at the SPY is down 17 cents on the day, while the dollar is up fractionally on the day. The inverse relationship does continue to hold. Now, there have been some fun trades in the intraday stock chat, folks. Some good ideas in the research center. One of them today, folks, was XING. This one was nailed beautifully. At $2.50, I gave the alert to buy in the intraday stock chat. The stock here, XING, which is a resource play in China, ran all the way to 271. So 21-cent run, just about 10% on a Chinese small cap here. The reason I used it is because, or the reason why I alerted to it was because I saw sympathy. This is one of the key plays that we teach in the intraday stock chat and the research center, and I do encourage you to join those both. By the way, folks, you get a free trial to the intraday stock chat or the research center if you want at this point. So we do encourage you to at least check us out, take the free trial, see what you think, and again, stay with us if you are making money, which we do believe you will do. Okay, so that's what we're seeing here again. XING, SHZ was the sympathy. Look at the run early in the day on that. SHZ is China Zhenzhou Mining and Resources. That one was a big runner. That alerted me to XING. And also the move yesterday and today on CHGS. Look at yesterday. It goes from here all the way to here and then continues up today. That gave us the alert. So all these factors telling me to call out the XING as a trade. And that was a great trade. Made a nice chunk of cash on that today. And again, that's what it's all about. All right. Other stocks in motion today. Caterpillar, I'm keeping an eye on this. I think it's heading for $100. It's coming off the highs today a little bit, but it could be looked at as a little bit of a bullish consolidation pattern. Again, the market will most likely stay neutral-ish into tomorrow, I believe, as long as things in Egypt don't escalate. And then overall, you're looking for the Friday jobs number at 8:30 a.m. We will be doing a No Hype Live broadcast. If you are part of the Research Center, you will get live charts for that. You'll get a live presentation, analysis, and calls laid out based on that number on Friday. So I do encourage you to join the Research Center ahead of that number too, which is again will be released on Friday. We'll do a No Hype Live broadcast, which again is a live broadcast with live charts as I give the play-by-play of those numbers, and we'll talk about plays and trades to make off of it. All right, what other stocks are looking interesting today? Well, first let's punch up the spiders and move back to that. You can see the market's just chopping here still. You are starting to inch up a little bit. I do think that you probably favor the upside because of the light volume. So you have a triangular pattern. Which way is it going to break? Could break down, could break up. I would have to generally just go with a slight edge to the upside based on the volume today. The dollar we talked about, let's take a look at the USO. The USO is just slightly down, had a little bit of an early morning pop and now coming back in. This is the second consolidation day, folks, second consolidation day of the USO after a big move on the Egyptian situation. You can see it better on the daily chart. Look at this massive move up and a pullback. Notice the low of the day here. This is very important. Let me erase some of these lines so you guys can see a little clearer. Notice the pullback here takes you into this necktie area of support. That is support, folks. Okay, so that is good support on the oil front. And again, if that holds, you look for another move up in the not too distant future. If it doesn't hold, you may be coming all the way back down towards the 200 moving average. Okay. So definitely watch for that. You'd be looking for a double bottom down here. Oil's been very, very volatile over the last week because of the Middle Eastern, Northern Africa situation. The Suez Canal is obviously a big issue as well. These are major factors that could disrupt oil supply for the world and obviously cause a major spike up. So you have to be a little careful here. I wouldn't say to buy oil necessarily here, but at the same time, I would definitely not be shorting it. If I had to pick one, I'd say go long as you stay above this necktie, and you might get a pop upwards of this double top again, maybe even a little bit higher. If it gets below the necktie, then it's a move out for a flat trade right there. Okay, so that's what we have going on there on the USO. The GLD is down about $1 today after a good pop. You can see we were analyzing the charts here as well. And again, the downward move, nice little pop off support here. And then the markets again coming back in a little bit. If you continue down, look for the 200 moving average. That will be your next major support line. Okay, some stocks in motion. Let's talk a little stock action here. First of all, I thought today was a great call. We talked about the double top on U.S. Steel. U.S. Steel has had a massive run back up. Look at the beautiful double top here. You can see that I had the line on the chart because we talked about it in the intraday stock chat. Even in the nightly videos, we discussed it. And you can see a perfect pierce to the double top on the daily chart. And look at the pullback you've gotten here. You've literally pulled back $1.50 off of that little bit of a pierce of a double top. That's good profits right there. Let me just tell you that. That is a good profit right there off a pullback. And again, classic double top. This is a learning lesson, educational lesson. Use those double tops to your advantage. If you get a double top, short it. Again, assuming you have the right pattern, which this is. And if you get a double bottom somewhere down the low end of the chart, you can buy it and make some good money on the upside. All right, and again, these are all things we teach in the Research Center, folks. Research Center is #1 out there based on plays, based on education, based on market analysis, avoiding the hype, and so forth. All right. What else? One stock I do like based off the U.S. Steel pop here, and U.S. Steel has been very, very strong. CPSL, I like this chart here, folks. Again, you can see choppy. It had a big run into the end of the year with the mineral metal plays, and now it's come all the way back down. I like this because it's a gap fill right here, as well as the 200 moving average. There's good support. As long as it stays above this 200 moving average, I would not be surprised to see a pop back to the 20 moving average up here. All right, so very, very nice little move right there. A little bit of an uptick today, but that's one of my favorite plays based on the pullback. Kind of the same type of pattern as XING and some of those other ones. Another one is CNAM is another metal play. You can see a massive pullback right into the 50 moving average here, holding on to the 50. If it gets through, it'll go to this blue line, but nonetheless, good solid pullback. It means a lot of the risk is out of it. Even though it could go down to here, it probably won't go any lower than this 280 level, 285 level, as it's trading at 335 in this current time frame. All right, so those are just two ideas there. Solars continue to be strong. FSLR up $8 today. Was up about $10, but it's pulled back a little bit. This stock has just been on a tear. Some small solar companies that I continue to like. One I did like, which isn't really a small one, but the JASO is popping today. I liked how it was off the 200 a few days ago right here. That's getting a pop. I wouldn't be surprised if that continues up as long as solar stays strong. Another solar play of interest to me was the Hoku. That's not a bad one. If you zoom out on the charts, it's been a sideways consolidation, choppy session here. Again, you would not be surprised if they get some sort of pop-up in the not-too-distant future. I believe earnings are coming out, so be a little careful around those earnings. I think next week they're supposed to come out or so. But nonetheless, just keep an eye on this chart. It does remind me this low-end solar stock has potential, a lot of potential, although they have to make a lot out of it to get to that potential. But it is a possibility, all right? So that's just a couple ideas there that I'm looking at myself. Let me see if there's anything else out there. That's about it for now. We've talked about a few other stocks in the intraday stock chat. I'll talk a little bit about stuff in the Research Center, some small caps in the Research Center. Small caps are waking up again today. That's why I'm talking a little bit more about them. In December, I'll tell you, that was a most amazing month for small caps. The money that was made was astronomical, and I'd love to get another month here in February of good small cap moves. It looks like it's starting up a little bit here. XING was just one example of an easy 10% mover today that was pretty easy to just nail, as I called it out as a buy at $2.50 in the intraday stock chat. All right, keep an eye on small solars, keep an eye on those mineral plays and the metal plays as well that have pulled back dramatically. Exxon and Chevron are flattish on the day. Exxon slightly lower, Chevron slightly higher. Apple's slightly negative, Amazon's up, RIM is up, Research in Motion there up $1.20 or so. Goldman's up, but JPM, Bank of America, and those stocks are mostly lower. All right, guys. Again, take the free trial out of the Research Center. Get involved. Time to start making money. We will talk to you all tonight in the nightly video, which, again, 30 minutes to 40 minutes in length in the Research Center. Take care. See you then.